Don, start on me and I'll introduce her. Yes? Hey, we're live. How are you? Our dear fans, we're here. For those who joined early, we're going to reward you. Don, our producer, is going to switch to the most stunning view of a young fawn in her glory years.
Switch over.
This is Paul and Paul's girlfriend, Paola.
Well, we're not really
from
official,
Mexico.
She's
she loves when you
modeling
say
our
that.
Everything Money Yeti.
Look at
her
this woman.
Her brother's in the chat right now. Is he going to say hi to us?
Paola, will you address our Spanish-speaking in Paul's mic? Address our Spanish-speaking crowd. Go ahead.
Hi, it's nice to meet you all.
No,
Hola.
Spanish speaking.
Hola.
Sweet.
Great, you heard it. You heard it first. There you go. That is Paola. We welcome you in.
Hola.
We just had wonderful Mexican food. She adored it. I'm sure here in Akron, Ohio, it was wonderful.
Do you want to head out? Head upstairs, or are you going to watch the show?
She has 45 minutes.
We welcome you guys in. I got you guys. We welcome everybody in all over the world. We thank you for joining us as always. You guys are incredible. All of you, we're always shocked. We talk about you guys all the time. We're always shocked about how many folks all over the world are joining us. And we're thankful you're here. Of course, if you're new to us, you'll notice that the chat is filled with all of our wonderful patrons. We started Patreon in November. We have over 1,500 people. Your support has been incredible. I know it's changing your lives and certainly changing ours. We talk about it almost nonstop. In fact, Paul and I had dinner on Sunday, and we literally said, like, are we just going to talk about the show the whole time or part of the time?
I don't even think we talked about it a lot.
You're right. We just kind of, yeah. So anyway, I welcome you in. Paul, is it Gabriel?
Yeah.
Gabriel.
Yes.
Paul is here. Trader Mo is here. We got new light on him. Welcome, Trader
Yeah,
Mo.
I like it, but I was told I'm not allowed to wear white anymore because of my olive complexion.
That olive oil tan. Paul, how are you? Who are you texting? And would you like to address our viewers?
What's up? My Spanish is going very well, Mataya. Today we were at the Mexican restaurant and she was speaking Espanol with the camareros, and I understood everything they were saying. No, I'm serious. That was pretty good. I literally every single thing you were saying. I was like, oh, I understand, except for the percentage thing, because numbers are still, to listen to them fast is very hard. But everything's going great. We did have a wonderful dinner, didn't we, on Sunday? At.The?
We did. Paul and I split, like Lady and the Tramp, we split lasagna for two, and he was licking it off my beard, It got awkward, but it was wonderful. We welcome you in today. Enough of this BS. What are we talking about today? We're going to go over some stocks. I'm interested in a couple stocks, Mo, that are hitting the S&P here in the next week, which are Penn National Gaming and Caesar Entertainment. Paul, we did a video a few months ago on Penn, and we always get the comments. Boy, this thing didn't live too well when the price rockets up. So I'd love to hear your thoughts.
So there's a joke in my group chat with a bunch of idiots, one of which is Mason. So they make a joke where when Penn was really low, people wanted to buy it. The guys in the group want to buy it because they just love David Portnoy. And I wrote in there, imagine buying a stock just because you think somebody's funny. And so obviously, every single time Penn goes higher and higher and higher, somebody says, Kyle, show the picture. Kyle puts the picture up of, and by the way, Kyle has not been in the group chat in a long time, and nobody's caught that yet.
In general, Paul and Mo, I'd like to start with this.
Okay.
I'm having a real heart-to-heart with a lot of patrons. And Paul, I keep hearing the same story. And Mo, I'm sure you've heard this too. If you're like me throughout the many years, you might not have had a lot of guidance in terms of investing. I got basically 0 in high school, 0 in college. I still get terrible advice from people. Mom, I love you. But people who still say, just invest in things that you really love. And if the price is going up, invest in it. But I've heard this story out of patrons, Mo, too many times. And the story is, I'm getting into investing. And Paul, they fire up investing and they find all the 10X, 30X, 3X, 10X hype stock, and they think this is what they should be doing. Many patrons I've spoken to is the process is, Mo, they lose their butt on hype stocks. When they realize that's not working, they somehow find us, Paul. And so can you please double down?
Well, even if it does work, hype stocks can work if you're a momentum trader. Absolutely can work. I'm not sitting there saying don't do it. I'm sitting there saying is, if you're starting to confuse, Tesla's got a lot of growth potential, fundamentals automatically. Real momentum trading is about purely looking at what the price changes are doing. Most chart trading is purely about what shape the chart makes when the prices change. That's it. But the second you start talking about fundamentals, I have a hard time taking you seriously as a person saying it's hype, hype, hype. Well, okay, then what matters then is fundamentals. And I believe fully that growth is an important aspect of all investing. And I'm just sitting here trying to teach everybody that there's momentum, there's charts, and there's fundamentals. I focus on momentum and fundamentals. Mo focuses on charts. More power to you. The great news is, on Everything Money, you can learn all three. And you can learn real estate. And you're going to be learning a lot of different stuff. So anyhow, that's the way it works.
I bring this up because oftentimes we do get grilled in the comments, and I know I'm not supposed to listen to the haters, but I open myself up to think, how can we make the show better?
If 1,000 people said they loved us and one person goes, you guys suck, Seth sits there and says the message, goes, Paul, look, this person thinks we suck. And then we talk about it for 18 more hours.
I guess the point is, I literally have to say in some of the comments, aren't we allowed to have our opinion? This is our opinion. And Paul, what you've really developed in me over the past few years, and I'm hoping we're doing with our viewers, is that disciplined opinion. Do you remember? You must remember, Paul, the conversations we had about Bitcoin and about Tesla.
And how long have I been doing the Bitcoin thing?
You've been very, very consistent with your message about digital currency.
What's it at now? 60,000?
Oh no, it dropped all the way down to 54 last night.
Did it?
Oh, 54. It's still there. Morning. It's still there.
But my point is, the swings, everything. I'm not going to get into Bitcoin today, but the point is, what you've really taught me, and what I hope we're transferring to you, is that disciplined sort of waiting game. Find the right stocks. And it doesn't seem like that's the process that most people have to start, Mo. What do you think?
It's not. It's people have the money and they see what all their friends are doing and they see what everybody on TV is doing and what on Yahoo Finance is doing, so they have to go and do that. And the thing that makes us different is that we're saying our opinion, which is very unpopular right now, and we're very consistent in that opinion. Soon, our opinion is going to be in favor, and people are going to be like, oh, you guys are geniuses, this and that. But that's going to be those people that are coming from the hype, that are buying the workhorse and the Tesla and all that right now. There's one person that keeps commenting, and he keeps talking about the fundamentals of Tesla. And I'm like, I can't even have a conversation with you because nothing that you're saying is making sense. So It's the sheep mentality. Everybody goes to what everybody else is doing.
Yeah, Paul, you've been consistent in that we're going to play our game, and even if other channels are going to get hundreds of thousands of subscribers in months, we want that really great 50,000 subscriber list, that really great 100,000 subscriber list. And so, anyway, this was hitting me, Paul, and I just I'm glad that I found you, and I hope our listeners are as well. So what's it like being wrong so much, Paul?
Listen, I'm fully fine with it. It does not faze me one bit. It's part of the discipline. I just want to keep doing what I do, what I understand, and over long periods of time, I will do very, very well. In short periods of time, okay, I'm gonna suck. Okay, so be it. And then the thing that will suck though is when stocks do fall a lot, there'll be some incident that causes it, and then everybody will say, "Oh, Paul, but we didn't see that. You didn't see that." I'm like, no, that's the point. One incident finally blows up the room.
It's the same thing.
One last fight finally gets the divorce to happen. It's not the fact that you didn't put the toothpaste cap back on the toothpaste.
Yeah.
It's what that means about the whole thing. It's the same thing as fun. Last year, my buddies were talking about COVID being the cause of the crash. And I was like, wait, on March 18th, I think we had 5,000 cases. We now have 2 million and stocks are up 80%. Clearly it wasn't COVID, guys. It was just
You
all
said
of a
this
sudden,
the morning of. I mean,
Yes.
the morning it all started falling, you were saying this, and you've been saying it for years. As I said to our patrons, I have videos. Paul, I was looking at old videos of you from 2018, and you are so consistent in your verbiage and how you think about investing. I was just astonished pulling them up. I was just, anyway.
And some people would consider that boring and all that stuff. Listen, I'm telling you, look at the best investors of all time, over 150 years. They all have these fundamentals. It's also fun to learn. In my opinion, it's fun to learn fundamentals. But I want you to know, if you don't like fundamentals, don't do them. I'm okay with that. You got charts, you got momentum, there'll be something that appeals to you, and that's what you should focus on. Doesn't mean that, just because I don't like charts doesn't mean Mo's wrong for doing charts. Just because you don't like momentum doesn't mean momentum doesn't work. Just because you don't like fundamentals doesn't mean it doesn't work. Just say, hey, this speaks to me the best. I'm gonna focus on this. That's it. That's it. Just like relationships, just like everything in the world, just because you find somebody to be attractive and attracted to them doesn't mean everybody else in the world will. You have to do what's right for you. Boy, that was a good analogy.
Paul, Joey said, I don't understand talking about fundamentals with companies that are not profitable. I get growth, but is it sustainable? That's a great point, really. I mean,
With fundamentals?
yes.
Yeah, because with 10,000 companies, guys, at some point, I shouldn't say this. The vast majority at some point will be a value play. Because stock prices, go pick up any stock you want. At some point in the last 5, you go look at the fluctuations over a 5 or 10 year period. It's insane. So you have to be the person that goes, okay, am I looking at this company right now? Is it overvalued or undervalued? Take out what the market thinks. What do I think? And that's what we're trying to teach here. And the more and more you learn about that, the better you'll be able to make decisions. The more and more you go back to history and see that, look at CCL was at $7 a share just a year ago. What's it at now? 31?
$30.
$30? Come on. Love was something we talked about today in a video. When I told everybody to buy Love, it was at $25. Yeah. $23.84 was the bottom last year. It's at $60.
It's at its all-time high.
Southwest Airlines.
Southwest
Almost
yeah.
all-time high. At 66, it's all-time high.
$5.
But it's 10% away from its all-time high. I'm like, come on. So your job is to sit there and say, okay, I have to realize that every stock at some point will be massively sold off. Is it the right time to buy it? People ask me all the time, what's Tesla worth to you? I can't value Tesla. I will never buy Tesla at these numbers right now. Now, at some point in the future, when it becomes a profit-generating business, I will have a value for it. And at that point, I'll buy it.
I've said this once before on the show, and it really hits home with me. If you're thinking about how this might, if you're new to the channel, and I see some new people in there, I love you. Paul and I once described this as like your offensive game plan, in whether it's football or soccer, or basketball. Like there's many different offenses in the world, and they all work to win. But if you're out there and you might not have any offensive strategy at all, we're trying to teach you one, whether it's with trading with Mo or just general value investing with Paul. This is really the mindset we're trying to get. So I'm very happy of sort of the playbook you've given us, Paul, and I love the companies that you've gotten us into. Okay, let's get after this. For example, Paul, so I don't know how to say this name. Llewellyn McLean says, please give us a good startup company for people who don't have much cash to invest but want in on the game. Thank you, sirs. Paul, I think, wouldn't the start be is to not thinking about this as a game? I mean, even though I mentioned offensive playbook, it's like he wants to get in on the game, give him a good startup that he can afford.
Well, a game could be a good analogy in the sense of if it's a football or sport. I think sports is the ultimate. I talk about chess and sports and poker, but the ultimate about value investing. It's exactly like investing. When you run a sports play, what are you trying to do? You're trying to give yourself the best opportunity to make the shot, make the goal, to score. You're not going to be right every single time, but if you do the plays over and over again the right way, you will end up winning in the long run. That's all investing is. You follow the right playbook every single time. Now, the game we talk about is how they gamify. Robinhood is gamified investing, where it's about, I look at it as basically like a slot machine. It's not really about numbers. It's not really about percentages and value. It's just about hoping that you, and then a couple times we're in the current market where everybody is double downing and hitting it every single time. That's not the way to do it. Getting in the game, start by ETFs. Just save money every single month. At the end of the year, buy ETFs, same amount, same allocation every single year. For long periods of time, you will do well.
Seth, I think this goes right to the question you asked me before about why do people go into that hype stuff? And she just said, I want a startup. Apparently she wants something with growth, fast growth, and that's a quote unquote cheap price. So just like we were saying, we were looking at CCL and Southwest when they were $7, $8, and $25 respectively. So you can buy stocks for cheaper that you're gonna be able to afford. You don't need to go in there and find the next big startup that's gonna soar and go to the moon like everybody talks about. That's not what this is all about. It's going and buying those ETFs and letting them grow over time and putting yourself in a good position down the road.
And if you're watching us and you might not know about anything we're talking about, Mo and I are devising a video series about maybe more basic approach to some of these terms that we're talking about. Paul, I get a lot of feedback from our patrons and from people in the world that could be fans of ours that are open to learning. They literally don't even know the words like what is the market and how I get money into it. We're also going to highlight some of that, and this summer is going to be a big growth period for us as well. Paul, someone said, and I love these comments. Someone says, forget about all the haters. Let's get to some analysis. Would you like to get to some of these?
Yeah, let's do it.
I don't know if you're a patron, but I loved what you suggested, Paul. This first company is called, Mo, it's called Catalyst Pharmaceuticals. The ticker symbol is CPRX. CPRX. Catalyst Pharmaceuticals. It's a pharmaceutical company based in Florida. Developing therapeutics for rare neurological diseases, phosphate salts. Oh, I know, Paul, you love your phosphate salts. The company looks fairly interesting, Paul. Do you want to pull it up there on the beautiful Everything Money software, which will be available?
So guys, remember Everything Money software, patreon.com/everythingmoney if you want access to it. But there's also so much more you'll get with it, such as access to Mo and I, depending on what level you pick. And currently it's $17. It was $8 just 2 months ago. Now the lowest level is $17. It's on its way up to $49 at some point. We have over 1,500 members who've signed up. Our goal this year was to end the year at 700 members. We now have 15, and it's only March 16th. We're up 50% since the end of February. Trust me when I say, value investing, join the Patreon. You will not regret it. Okay, so I've added a few things to the website. We've changed it up a little bit, which I love. Market cap, this is a small company, Seppi. $380 million.
What's the market cap for this?
$380 million.
Thanks. CPRX.
Okay, PE of only 5.3. That's a check mark there.
Nice.
Wow, profit margin of 60%. Another check mark there.
Double checks already, huh?
Why do we have? Wow, this is pretty interesting. Okay, so guys, I've changed a few things here. I'm looking at. I've changed a few things here to make it easy for you. The last 12 months, they had $44 million in free cash flow. The average 5 years, though, was $847,000 a year in free cash flow. So they must have had big losses along the way. So that's going to be no dividend, return on assets high, return on equity high. This return on invested capital is something I think I'm going to be removing the profit margin pillar and replacing it with return on invested capital. And the reason being is return on invested capital, and by the way, 2.4% is very low, but this is an average over the last 5 years income. Return on invested capital, a lot of value investors believe this is long run what a company should do. What that means is how do they generate profit on the money they invested in their business? So it takes you can invest money in a business two ways, either borrowing money, which is debt, or putting money in yourself, which is equity. So it takes those combined areas and takes the profits that's been generated over the last 5 years divided by the most recent, basically total amount of money invested in the business. And it gives you this 2.4%. Now, on the 5-year basis, if it's a company like this, it's probably grown a lot. They probably had a lot of losses along the way. So it might be skewed. But the point is, it's something to look at. And we'll take a look. So far, Seth, we have 2 check marks on our current pillars right now.
Yeah, a couple folks are saying that this Catalyst Pharmaceuticals, it might be a magic formula stock. So there might be good things in store here, Paul. And if you're watching this on if you're not watching us live, this is obviously a live stream, so we're taking requests. So we've done zero research on this company in terms of due diligence. We have no clue. Someone requested this, but this is our 500-foot view screener of can we go forward and maybe look deeper on this company, Catalyst Pharmaceuticals. So Paul, pillar number 3 is revenue growth over the past 5 years.
So the revenue growth, this is weird. I got to make sure we have all the data here because I don't want the haters to, because I'm not showing any revenue.
Go ahead, Paul.
It looks like that on white charts.
Oh,
It is like that on the white charts?
Yeah.
So guys, this is probably a big issue we have. There's no revenue for many, many years. But they had revenue in 19 and 20 of 72 and 118 million. So check mark for whatever reason.
it's saying the same thing on Wikipedia that there's no revenue as of 2018. So
Beautiful. Profit, negative 18 million to a positive 71 million. Check mark there.
it's going up. Okay.
I mean, I like this so far.
Okay. Pillar number 5 is shares outstanding. We want the number of shares going down, hopefully, Paul.
It is not, which is not a shock to me.
Uh-oh.
83 million to 103 million. That's an X. You know, usually smaller companies that are growing are going to issue a lot of shares in order to grow, to raise money, because they'd rather do that than bring on debt and kind of hold the company down. So I am kind of surprised, though, with how cheap the stock is relative to its, from a PE standpoint, but either way, no big deal.
Pillar number 6 is current assets.
I'm going to bet a lot of money that there's more cash on hand than total debt.
This is current assets over current liabilities is pillar number 6. Go ahead, baby cakes.
143 million? Oh, my lordy.
Give it to me.
Good Lord. Total current liabilities of 18 million, total debt of 18 million. So guys, what this means is they have $143 million in cash. The total debt of the company is 18 million, not even current debt, total debt. That means 125. If you bought this company tomorrow and paid off all its debts, you'd keep $125 million if you shut down the company. Which means the current market cap is how much?
Well, in front of me on Google, it says 425.
Oh, it must not be updated for us.
Yeah.
So minus 125, you're basically buying this company for $300 million today.
Oh, holy cow, look at that. So it comes right off the bottom line, the market cap.
Right off the
there.
bottom line. So this is the be all and end all. And this tends to be in startups, technology businesses that are very young. They tend to have more cash on hand than total debt because they try to raise money through equity.
Yeah, guys, feel free to, guys and gals, if you're in the chat, feel free to fill us in. You know, Joseph is saying they may have a weak pipeline of drugs coming out. Who knows? Pillar number 7, Paul? Pillar number 7, that's a check for 6. Pillar number 7 is free cash flow growth, my friend.
Okay, so right now, guys, free cash flow. And again, because of the 8 Pillars website, I actually added a line to the investing section for free cash flow. And I'll be over here. I'm going to put an average in here at some point. Hey, what's your name over there? Mo. Can you write me an email and just say, Paul, remind the developers to put the average 5 years.
Oh, that's a great idea,
on
Paul.
here.
Then we don't have to have me do this and mess it up.
Well, it's already calculated even on the main page.
Okay, keep going.
So right here, we have an average of $875,000. It's $18 million loss, $14 million loss, 22 loss, 13.8 gain, 44.2. Check mark. Now here's the deal, guys. I'm not worried about these first 3 years because they were losing money all along the way. They had no revenue. I don't give an F. So really, I'm going to look at the last 2 years. That's $28 million average. This is 10 times free cash flow.
Wow. 10 times.
Because you have $300 million after paying off the debt divided by 28 equals 10.8. I don't know, something like that. So, guys, this is a small company. What do they do exactly?
They do neurological drugs.
So why are they all of a sudden
I don't know.
selling a ton of stuff?
I don't know. That's something that I would want to go further and look into because I'm just reading their description and neuro's a tough industry. But I mean, I think it might be worth going to look at it. So
guys, this is a company that, boy, I really hate to say this.
Say it, Paul, baby.
I'm not going to say it. This is a very interesting company. Whatever they did that got their revenue to skyrocket, whatever they did, whether it was, they probably partnered with somebody, didn't they, Mo?
I don't know. I haven't looked any further than the white charts description. I can look.
We got to figure it out because this is something that you have to sit there and understand. Because if this is part of the company's future and they're growing and they have this revenue potential for a lot of years, this could be a big company. This could be a company that really gives a good return on its money because you're going to make a 10% on your. But I usually think that smaller companies have much more. They're more likely to all of a sudden go to zero too. So if now I'm hoping that we look at it and go, oh, they signed with a a bigger drug company and licensed a drug to them. Because if you look at their bottom line profit, it's a huge, because here's the deal, Mo, look at this. Their bottom line profit is freaking like 80%, 70%, 60%, whatever the number is. That's huge. They can't have sales costs in here. I mean, their sales costs are, they actually do have sales costs in here. But they have no other, I mean, it's weird that they have research, and I mean, this is incredible, guys.
Gianni's saying, who requested this, said they only have one drug for a very rare illness, and it's the only they're the only company that produces it.
So this is an acquisition potential?
Tell us about it.
Well, I mean, if you think about it, like a big drug company might sit there and say, hey, understand what the disease is, understand what the drug is. If they're the only ones that have the drug that would treat a specific disease that has a big market, you're gonna see Pfizer, especially as a publicly traded company, they're gonna wanna do some sort of like, maybe a hostile takeover, where they just start buying up shares, or not a hostile takeover. Is that what it is? I don't know, but they're gonna buy a lot of the shares and make a proxy to try to buy all the shares of the company from all the investors. So it might be the potential.
Mo, do you wanna look at this or no?
Yeah, I mean, so what their disease that they go after is Lambert-Eaton syndrome, and it has something to do, I can't really remember this from school, but it has something to do with where there's something wrong in the neuromuscular junctions, and this is gonna probably make that connection. But I wanna see the prevalence of Lambert-Eaton syndrome, and who's taking I mean, how popular is this? You know, it's not a rare disease, but you wanna do the technicals of it?
Sure, go ahead, Mo.
Okay, so we have another 50%er, and you guys, we're gonna see this. It's so common in today's market. Here's your high, here's your low, and here's this resistance line. So we're going back into that resistance line. The thing that I wanna show you, and this might be something that we look at depending on what kind of drugs they're using in the future. I can't really zoom in on this anymore for right now, but if we get this red line pushing up through that yellow line like that, then you can, this is something that I'm gonna throw a tracker share on, put one share on it, buy it for $4.11. Worst case scenario, the company goes to zero and you lose $4.11. But what I wanna see is this red line pop up through the yellow, we get some green engulfing candlesticks going like this, and you start making money on it. But right now, the only thing I would do is put a tracker share on it, one share, keep a watch on it. Go ahead, Seth.
Mo, you did go to medical school for how long?
2 years.
2 years. That's how you know.
Yeah, and I
some stuff.
remember covering Lambert-Eaton syndrome, but Seth, I've forgotten more about medicine than I learned about medicine at this
me
point.
too. I mean, I have that old PhD in chemistry,
Yeah.
and that was so long ago. I could certainly tell you a lot about magic cards, and now stocks.
Now I can tell you a lot about stocks. I can't tell you about medicine.
Yeah.
I feel like I just know enough medicine to be like, okay, this isn't total BS. Let me go ask a doctor.
So I do see. You know,
Okay.
I feel like I'm certainly am a very talented wedding photographer.
Yeah.
You can check out my photos at sethandbeth.com.
Nope, this way, dress every
It's my
day.
wife's birthday today. She's getting
40.
She's getting pampered right now. But yeah. So, but in reality, yeah, I've definitely forgotten a lot of my. Bye, babe. I've definitely forgotten a lot of the sciences. But Mo, I would say it's funny is some people can now sort of consider me to be some sort of specialist when it comes to stocks and
Markets?
investing.
I mean, Seth, you know more than the average investor. There's no doubt. I mean, you and I, back a year and a half ago, we couldn't have a coherent conversation. It was like me educating you.
Yeah.
And basically being over your head about it. Now we can have a back and forth about it, and you know a lot. And it's really only from spending time with two guys. That's it.
Yeah, I mean, yeah, Paul is going. Paul is not live, so
He's
whatever-
in the bathroom.
Yeah. Is someone in the restroom? Is this kidding? It's not possible. It's not possible.
Somebody put me live on there when I was in the
I mean,
bathroom.
You
no, that's not possible. His mic is Paul. That's not. I mean, well, they're saying it's possible, but
It's not possible.
Paul pissing is classic.
Oh, they heard it?
I muted you 10
think
minutes
so.
ago.
That's awesome.
Okay,
That's wonderful.
Listen. If you guys,
That's also what makes us different.
okay, this is great. Listen, yeah, if you saw the movie Naked Gun, but if you've seen it, the same scene happens. He's in a courtroom, Paul, and he goes to the bathroom, and it's live. Oh my God! Listen, Paul. I swear to God, on heaven and earth, while you were hugging your girlfriend and leaving, I cut all the mics, and sure enough, somehow, it was
Is it
still.
because I got out of range or something and then came back into range?
So like right now, you're not on.
I'm not on right now?
Oh, there you go. I hear you now.
So was it because I got out of range all of a sudden?
I don't know.
I did wash my hands.
If so, yes, we heard it. He was whistling and everything.
I was whistling Despacito. I was like, and then did everybody hear me go down, because I started to hit the flush and somebody just went in the bathroom and it like wasn't going down. I'm like, go down.
Oh, okay.
That's awesome.
Listen, I don't know how to carry on this show. I'm usually red-faced in general, but it's so funny. Okay, welcome to the show. Listen, you're not going to get this BS with Graham Stephan. Guys, little do you know, all of our shows are basically live.
Yeah.
Yes.
They're live. We are not going to sit here and just read off like a robot the news. Most of this stuff I'm bringing to Paul now.
It's literally off the cuff.
It's off the cuff.
We walk in and me and Paul go, all right, what are we talking about today? You want to do this? Yep, let's do it.
So we do get criticized on our due diligence of what we do, but in reality, I want you to see what, the whole show is me bringing Paul my problems in life, and he answers them for me about money, about vacation homes, about how to move forward in my business, how to save, how to budget. And so what you're seeing is basically this is my life, is bring Paul all my problems, and he tries to answer them for me. And
I literally was going, go down.
you're cheering on the toilet.
Yeah, because somebody just used the bathroom before me. So I'm like, okay, as I take a leak, it'll refill its tank, and it wasn't refilling. So I'm like, okay, I'll just hit the thing, and it's like, I'm like, oh no, come on, go down. And I'm like, okay, it went down.
Well, hopefully that wasn't a big, that would have been great if it was a big number.
So what do we determine on this company? Because I actually like the numbers here. And
let's get back to it.
I want to dig into this. This is something I'm going to pull a 10K and try to talk to some people that are in our dad business neurology.
If they have at least this level for the foreseeable future, this is a buy for me. If I think that this level of revenue is going to continue, and it doesn't even have to grow. If it just stays the same for the next 10 years, this is a buy for me.
Mm-hmm. This doesn't happen often. This is Catalyst Pharmaceuticals.
Now, also a company like this, their market cap is 425 million. That's acquisition city right there for if they have something big.
By the way, net's 300 million. You gotta take their cash off the books.
Yeah, maybe that. Oh, okay. So
the net is not the net.
So final take on Catalyst Pharmaceuticals. Any target
Do more
price?
research. I like it.
Do more research. Yeah.
Do more research.
Mm-hmm.
Okay, Mattia, what happens if you own shares of a company and the company gets acquired?
Now this just happened. My son has what just got acquired last week for $21.
The Michaels, right?
Michaels. My son has Michaels, and
they'll make an offer. So what happens is the company will be selling for $17. To make it enticing, the acquirer will offer you more money. So let's say, for example, like Michael's offer you $21 a share. That way your price just jumps up, and it's an incentive for you to go, oh, you know what, it was at 17, now I'm gonna get 20, fine, I'll release my shares. Because they have to buy the shares from you. They have to make it attractive enough for that to happen.
Yep.
Interesting take. All right, that is the pharmaceutical company, Catalyst Pharmaceuticals. Paul, I'd love to look at Dropbox.
Oh, ooh.
We've gotten some Patreon requests for Dropbox. Someone in the comments today said Dropbox. I'd like to look at it. Everyone knows Dropbox. Paul, I've been a huge fan of this for a long time. I have a couple trillion files on Dropbox right now, and I use it for my backing up of my wedding photos and whatnot. And it's a big company. Are there companies? Who are the competitors, Mo? I also use
Dropbox?
Google Drive, which isn't as flawless.
So when Dropbox came out, they were the thing. When I remember using them when they were in beta testing, and it was awesome. And then I feel like they have completely fallen behind. You have Google Drive, which gives you, I think, 2 terabytes now for free. Apple iCloud is pretty good if you have the Apple ecosystem. iDrive is another one. So I don't know. I don't like Dropbox, but let's do it.
Oh, Microsoft OneDrive, Eddie's saying, or Google, yes, of course. Apple Cloud is where it's at. Gil, I even have Apple. I don't even understand it. Paul, would you like to look at Dropbox?
Yeah, I'm attaching a bug here real quick. So
here's Jacob. I've talked to Jacob before about Dropbox. He loves Dropbox so much. Every time I bring up Dropbox and disliking it, he's like, I love Dropbox.
Oh, yes. So in general, I think many. Tell me if I'm wrong, but the system of Dropbox when I get on, actually loading up files and sharing is not very clean. I really love the way Google has their sharing.
Too. Yeah,
makes it much cleaner. But
before Google Drive came out with their thing, Dropbox was the best way to share a big file with somebody because you obviously can't email it.
Paul, we have a lot of people. This is such a global channel. We have people all over the world asking for European countries. Are we ever going to look at overseas companies, Paul? Like ever?
Yes, hang on a second. Well, because I'm trying to do this, which is good.
I understand.
Okay, one of my next things I'm going to do, at some point, we're going to have as all the companies that are publicly traded around the world, as we grow and get this user base from 1,500 subscribers to 50,000, along the way, probably closer to 5,000 or 6,000 subscribers, we're gonna add way more data. Guys, I'm only gonna have stock data here. I'm gonna make this a search engine for all economic data. I plan on buying feeds from the US government, everything to get median home prices, interest rates, historical numbers on everything imaginable. That way you come to Everything Money for all your research needs having to do with anything financial. This is not just gonna be stocks. This is gonna be every possible financial metric you can imagine. And one of the things I'm gonna dedicate at some point when we get to 5,000 subscribers is a lead data person, a chief data officer who's gonna be in charge of finding us more data for as many things as possible. That way, you never have to sit there and say, oh, where should I go for this data? You go to Everything Money. If we don't have it, you make a suggestion, we'll see if we can get it. That's the goal here.
Dropbox seems to be a huge topic, Paul. The comments are flying in about people's what they think in comparison to other competitors. So perhaps we can look at it. Dropbox.
Okay, let's look.
Go ahead, Paul.
So I want everybody to notice one thing about Dropbox here. Look at the chart here.
The ticker symbol is DBX. DBX Dropbox. Go ahead, Paul.
This is back in 2018, April of 2018, skyrocketed, and it fell back. Guys, look where it's at right now. It's at a level lower than April of 2018 when it went public. It's at what, $20-some a share?
27 right now.
27. It's still lower than when it went public. This is what I'm talking about, guys. Are you telling me Dropbox hasn't grown a ton? So look at this. Dropbox in April of 2017, let's look at its revenue.
There you go.
Look at the revenue from April 2017. Let's go quarterly. Let's even go to, let's see, hang on a second. Next period. April of 2017. June of 2017, they had 266 million in revenue. They now, last quarter, had 504.
Doubled.
They've almost doubled. And yet, look at the stock price. This is what I mean when I say, guys, the stock price doesn't necessarily match here. The stock price is lower than it was. Why? Because it was too expensive here. For those of you who don't believe, this is a company, if I told you right here, guys, the company's revenue is going to double in the next 3 years, what would you have said?
Oh
my God.
Rockets.
And then what happened? This is proof that it happens, guys. You can overpay for growth. At this point, actually, even better, it was July. June of 18, it doubled since then.
I hear you getting fired up, Paul, because this is, we rarely see this, is everyone wants to look at this huge climb without thinking about the possibility of what's happening afterwards and what you're paying for your going back to your growth.
By the way, we do see this often, but it's usually after the bubble bursts. This is one that was during the bubble rise. I'm surprised that Dropbox, during this bubble, has gone down.
So
but it does happen.
This may seem as a good buying opportunity for a dummy like me, Paul, because the price is so low in comparison to its heights.
Correct.
Now, those heights may very well be overhyped, but it's interesting. You want to get into it with our 8 pillars?
Let's do it.
What is the market cap for Dropbox?
$9.2 billion with a PE that is negative because they have not made money yet. So we have 2 X's to start, negative profit margin and negative PE.
Uh-oh.
X's, okay?
Double X.
Now, free cash flow, though, in the last year was $500 million. So they had a loss on the books of $256 million and free cash flow of $500 million. This is why I want to focus on free cash flow. No dividend, all the negative numbers. When you have a negative return, you have negative return on invested capital. So let's go on.
Revenue growth over the past 5 years, pillar number 3.
Well, we only have 4 full years of data, and it's a check mark. 1.1 billion to 1.9 billion, check mark there.
How about profit growth?
Okay, profit growth. It's an X.
Uh-oh.
They went from losing 111 million to losing 256 million. That's another X there, okay? Shares outstanding.
Pillar number 5.
In X as well, 393 million up to 411 million, X as well. So we're not off to a good start here. We only have 1 check so far.
Yeah, you're right. That's the revenue growth. Current assets over current liabilities is pillar number 6 for Dropbox.
1.3 billion in cash, 1.03 billion in liabilities. That's a check mark there.
How about the free cash flow, pillar number 7? You know, Paul, let me just pause real quick. If you're watching at home, this website is completely absurd, and it's ours, Paul. The ownership of the pride you must feel of making this, hiring people to do this. It looks incredible, and I forget that we made this.
We did make it. It's a very big compliment I get, and the funny part is, guys, this looks nothing like I want it to look either. Like this is going to evolve over time. This is what the investing in this software for yourself is. This is going to change so much over time. It's going to get better and better and better. You're crazy for not signing up. So,
free cash flow growth over the
so
past
this is
5
interesting,
years.
guys. They've had free cash flow every single year for the last since they went public. 246 to 492. Check mark there. So you're probably wondering, how do they have a loss with free cash flow? Got to go figure that out. You have to figure out why they had free cash, because over long periods of time, free cash flow and net income should equate to the same. And they're definitely far apart here. They've had free cash flow of 250, 330. I mean, this is over $1 billion easily. $1.3 billion in free cash flow, and they've had a loss of like $1 billion. So it's a very big wide spread. I don't know why, but that's part of the whole peeling back the layers.
The average is 350 for this, Paul. And some people said in the comments that it's projected. Now, you don't look, I never hear this word come out of your mouth, projected revenue, but they're saying free cash flow is targeted to be $1 billion in 3 years. But I mean, you never say that.
Well,
Eddie said this.
if you go look at projections over time, they tend to be very, very far off, especially years and years out. I'm actually surprised the revenue growth wasn't that. The thing that concerns me about Dropbox is we all worked from home and their revenue is only up 20% since last year. Shouldn't it be up way higher than that? From 2020 versus 2019 is only up 20%. Not even 20%. It's like 18%. For a company that big of a multiple, should it be a lot bigger multiple? I mean, I would buy this company, I hate to say it, I mean, 3 to 4 billion? I'm not impressed by this.
To your point of
So it's got to drop in half at least.
to your point of working from home and stuff, I think it might be that companies like Google and Microsoft, they sell you that entire bundle of services, and sharing and cloud sharing is one of them. This is just...
We had Dropbox, and I dropped it for Google Drive.
Exactly. That's my point. But also like Microsoft, Microsoft, you get everything in one thing. With this, you're going to buy one specific thing. I mean, that's not very...
Is this an acquisition target? Yes. Is it going to be an
Yes.
acquisition target $9 billion? I don't know.
Probably not.
Maybe if somebody goes, listen, it's $500 million in free cash flow. It's 20 times free cash flow in the last year, and they're growing, we get incorporated. But to me, it's got to be somebody who needs that. Microsoft has OneDrive. Google has Google Drive. Apple's got iCloud. Who are the other big players out there then? Amazon?
Amazon has cloud services, and yeah, I mean, how are you going to compete?
I just look at it going, unless this company goes super, super cheap,
Yeah.
I'm not an acquirer of them. I'm just not going to. Because how many users do they have?
I don't know.
This is where it involves, like, you
yep.
want to look at user growth and all that stuff.
Benjamin said in 2020, their non-paid users went up almost 20%. Whatever that means.
Okay. What about, why don't you compare that to Google Drive, iCloud, and those other ones?
I'm with you. Like the whole Google platform, how I can make a document, make a sheet, and then share it in a
Yeah.
drive with someone else. It's
Yeah.
so different from Zoom. Or not Zoom, what am I saying? Dropbox. In that, Dropbox, I simply just store old crap on.
Yep.
So this is interesting. Yeah, Salesforce just bought Slack. Maybe they'll look at Dropbox, Bogdan is saying. Yeah, interesting.
Nice thing is the infrastructure's there.
Mo, would you like to talk about trading for this company, Dropbox?
Sure, and I have the more detailed chart up right now because I want to show that they are currently above all 4 of their moving averages, and they have made a 52-week high. So let's go over to the long-term chart, and what does that mean? It means that we have a power stock, and this could be the start of a power stock. So this is the time that you want to get into a power stock, when it just starts making that new all-time high. So you are the one that collects maybe those 3 months of gains. So let's zoom in a little bit more. So right now, we're coming through the sweet spot. We are getting into that overbought range with just a few days of positive trend. No big deal. It's okay. If this thing does break out with a green candlestick like that tomorrow or Thursday or something, you can go ahead and get into this thing. And here's your power stock. I mean, for those of you that are asking me, you always want to buy power, and you're kind of buying at the end of power. This is power at the beginning. This could be a great one for you. Keep an eye on it. I would advise adding to it when you make a new all-time 52-week high.
All right, that's our take on Dropbox. Paul, wouldn't you say? Final take?
I'm not interested in Dropbox. I think the competition's too good and too prevalent. I'm avoiding Dropbox. I mean, the free cash flow is still expensive. I'm just not cool with it.
In your opinion, of course.
In my opinion.
Guys, I love everything you're doing there. Paul, will you give us a little twirl with those beautiful shorts? Someone was saying you are really sporting these beautiful shorts.
I got the LeBron basketball shoes now too.
Yeah, show off those shoes.
Are those Fabletic shorts?
These are Fabletic shorts.
We're wearing the same shorts. How about that?
And what's on your wrist, boys? The wrist check?
Oh, the Sky Dweller.
Oh, I know this one.
Oh, this is the Sky Dweller. This is cocky as F.
As F, yeah. This if you're in the Patreon and you haven't seen...
Oh, and by the way,
Go ahead, Paul.
I'll be giving away a watch soon. Not on this channel.
Come on.
On another channel, a friend of ours has a big car channel. He's
Why are we
Kind of
helping
what?
him?
Go ahead.
Go ahead.
Go ahead.
No, go ahead.
Nothing.
Let's speak open and honest here.
I said I was like, guys, I kind of have maybe a new business venture coming in the future. I told that to my the Bid and Ask Nation.
Yeah, so I look at this saying, listen, there's some watches I don't want to, I bought and I don't wear anymore, so I'll be giving away. You have to buy gear from him, but I'll let you guys know when the watch is on. The good news is the watch is in tandem with a car. He's giving away cars as well, be it to buy gear from him to do it and all that stuff.
And something else.
What else?
Jet ski.
Oh, and the jet ski. It'll be Mo's truck, his jet ski, and my watch will be given away, and it'll be fun.
So yeah, if you are on the Patreon and you saw Paul's watch tour, he'll also be giving away watches on this show as well. I'm surprised we're not doing this one. Which one is going to be given away, Paul? The red one you don't like as much?
The red one, there's a few that I don't wear, but I've worked out a good deal with this guy. He's a good dude. He has 226,000 subscribers.
Would you like to mention him?
Ryan Mayer, Mayer. I love to eat it every day. He's a good guy. He lives in Royalton. He went to.
I coached him in baseball since he was like 14 years old and started doing this.
He's a good dude.
Yeah.
Should we get back into the 8-pillarness?
Yep, let's do it. What's the next one?
Someone brought up now, real quick, a fan of ours, whom I love, talked about the idea of like, we know you're not a big fan of investing in IPOs.
Correct.
Yeah.
But what about that Coinbase IPO? I don't know anything about
Hype.
it.
I didn't even look at the numbers. It's all hype.
Okay, I agree, but Trader Mo, your thoughts? I mean,
What's the? I don't even know what this is.
Oh, you don't know what Coinbase is?
Coinbase. It's the Bitcoin.
It's the Bitcoin
cryptocurrency,
wallet,
holding
wallet.
thing. Yeah, wallet, whatever it is.
It's like the main crypto wallet. If they come out, I'm certain, much like the coins, they'll just go completely bonkers.
So what I would say about that is, I mean, is it like a public company? When are they going IPO?
You know what? I shouldn't have brought that up. That's stupid.
okay.
It's fine. I don't know.
But the point is, use a 15-minute chart, trade it, learn how to trade 15-minute charts with me. It doesn't matter what the asset is. Just come and learn how to trade it on the 15-minute chart, and you'll be good.
Okay, Paul, I got another company for you. This is
And by the way, if you join our Patreon, I'm also doing a if you're on our Patreon, I'm doing a March Madness bracket.
Tell us about it.
March Madness bracket for everybody on Patreon. I want to get 300 or 400 people on it. It's the first prize is $2,000, second prize is $1,000, third prize is $500, fourth prize is $250. No money out of you guys. I'm just giving it away. It's just a Patreon only bracket. You have to be a Patreon member and sign up with your Patreon email. Nobody else allowed in it. We already have.
Oh, how fun.
Yeah, it's a lot of fun. We already have.
And when does March Madness start? Anybody
Thursday.
know? Thursday. I got to get going.
We have 187 brackets right now. I want to get more. So if you're in our Patreon, go to our Patreon announcements. It's like 2 or 3 above. And again, this is no entry needed. This is part of the benefits of being a Patreon. I just randomly give stuff away every so often. Somebody said to me yesterday, "You're spoiling us." I'm like, I'm not spoiling you guys. You guys deserve it. Like literally, you guys are giving up me your hard-earned money to make the software great. I'm just going to keep making it better and better and better. And I'm going to do random giveaways like this and be done with it.
Someone said Coinbase is not a wallet. It's the biggest crypto exchange. I don't give a crap at all. Okay, here we go. Paul Bogdan is saying, what about non-US people? Can they get in this bracket and will you send them a check?
I'll send you a check. And guess what? I won't say it, but I'll send you a check.
So
if I have to hire you, I will.
So for our overseas people, if you want to get in, Paul will send you the money, darn it. Maybe not on our terms and conditions.
I'll send it on Bitcoin.
Yeah, we will send it. And yes, Paul is the sugar daddy. You're right, Nick. Okay. This next company, Paul, that I'd love to talk about is called not Prestige Worldwide.
Oh.
It's Prestige Customer Healthcare.
PBH.
Ticker symbol PBH. Yep, PBH. Prestige Brands Holding is an American company that markets and distributes over-the-counter healthcare and household cleaning products. Barcelona. It's based in New York. It's founded in 1996, and the stock price is down. This was requested from a Patreon member.
Look at this, Seth.
Give it to me, baby. What do you got?
A high of $57. on February 27, 2017, 4 years ago, and now it's at around low 40s. I mean, that's a pretty nice drop. Let's look at it. $2 billion market cap, Uncle Seth.
I like
$2 billion market cap, PE of 12.8, check mark.
Hey.
Profit margin 17.4, check mark. Now, guys, again, everything money. We're going to give you last year's free cash flow of $200 million. 5-year average is right here, but we're going to add it to the cash flow statement, $184 million. So already off the bat, it's selling for about 11 or 12 times free cash flow for the last 5 years. We have a check mark there.
Pulverizer says this is a buy already. I mean, he may know more about it, but he's saying it's a buy. Let's look at.
So one thing now, we're doing number 8 early because I have this information here. So right now, guys, here's the 5-year average free cash flow, $184 million. The 11, what is that, 11? What's 2,100? 2.1 billion divided by 184. 11.5.
Thanks, Don.
So this is already a check on pillar number 8, which is the price to free cash flow.
Oh, so we're skipping the 8, but that's a good sign when the price to free cash is right in our wheelhouse.
Yep, and I like the fact that last year's free cash flow is above the 5-year average. So without looking at the financial statement, it's already telling us it's probably in an upswing. No dividend paid here, and a really, really low return on invested capital, 3.9%. That could be for a lot of reasons. When we look at the income statement, we'll understand why.
PBH Pulverizer is saying is 8 and 8 from 8 pillar. 8-pillar company, and from the little book that beats the market, which, Paul, I looked again, Mo.
What are you up?
Oh, boy.
59% return since last July.
Stocks only go up.
That's incredible. It's absolutely incredible. All right, let's keep going.
Until they don't.
Let's keep going with Prestige Consumer Healthcare, Paul. Revenue growth over the past 5 years, my friend.
It is a check mark, but it's weird. It's a check mark, but they had a big year, went from 850 to 1.03, and then dropped 2 years in a row and went up. But it's still a check mark. It's still up over the last 5 years. And look at the last 10 years. It's over doubled. That's incredible, $400 million.
Profit growth over the past 5 years, my friend?
Absolutely. Profit growth, 72 to 166, check mark. But this is all over the board. We had a gain of 400 million, a loss of 34. So you want to understand why that is. But it is a check mark. 4 straight checks, and Nick is correct. The next live stream will be from my yacht. I'm not ever going to get a boat. You neither, right? I do not want a boat. I'll rather rent a boat.
Yeah, you're going to get a plane for yourself, a jet, right?
Yes.
Pillar number 5 is shares outstanding. We want this number going diggity down.
53 million to 50.2. Check mark there.
Ooh, I like that.
Yep.
5 straight. Current assets over current liabilities is pillar number 6.
Current assets are 300 million. Current liabilities are 126 million, so check mark there. A lot of long-term debt, though. $2 billion. But it's $1 billion of revenue. Maybe that's not so bad.
Paul, I can feel the heat from your undercarriage at 6 straight checks.
I know, it's pretty good.
Shall we head to free cash flow?
Yep. Like we said, free cash flow, 178 to 207, check mark. The thing I like about this versus, so we have 7 out of 8 check marks, right?
7 out of 7.
What was that? Oh, 8 for 8?
Yeah, no. Yeah,
yeah,
you're
we
right.
did it. This is all 8 check marks. That's right.
8 for 8. Yeah, wow, look at that.
Wow, okay. So what we have here is, if you remember, the income statement had profit and loss all over the board, but the cash flow statement is a lot more consistent, right? It's a few bumps here and there, but it's just consistently going up. I'm a huge fan of that. That tells me, okay, this company is, but I still understand why the revenue is still down from 3 years ago, not from 5 years ago. So still understand those things, but the average is 183, I think we said in the first page, 183 million. So this is looking pretty solid. I mean, 11.5 times free cash flow.
Prestige worldwide.
Why is the return on invested capital so low? Let me make sure it's being calculated properly. Oh, they have a lot of debt. That's also why.
Mm-hmm.
Okay, that $2 billion in long-term liabilities. Oh, they have a lot of. I think that's still incorrect. Let's see. Let's make sure.
Oh.
No, it's right. This is just a lot. Yeah, it's just the average profit of the last 5 years is how much? So 390 and 70 is 460, 520, 490, 650 divided by 5 is 130 million on 3. Yeah, that's about right. So I don't like the return on invested capital, guys. This is bad. This return on invested capital is something I haven't talked about much with you guys because I want to make sure I'm accurate when I pull it up. This is the company's ability to make money off its own investments. Like, how does it use its own cash to generate income? They've invested a lot of money to generate not the greatest income. So it's at 3.9%. The return on assets, 4.8%. I don't think this would be a. Is this really a little book that beats the market stock?
That's what people are saying.
I
Because
don't know.
Little Book
I'm just surprised what they make. I didn't know that this was this company. They make the clear eyes, like the eye drops
so
and
they
stuff.
do guys.
Dramamine.
They do. Oh, there you go, Dramamine. They do
Yeah.
digestive care, eye, ear, nose, and throat medicine, household cleaners, oral care.
Yeah, they make Comet.
Pain relief. They make Comet,
Yeah.
skin care, boy, soap, sleep aids, women's health. Interesting. That's a lot of different stuff.
For sure.
This one stumped you a little bit, Paul, huh?
Yeah, I mean, I like this return on invested capital as a, for those of you who are just getting the show, I'm changing the first two pillars of PE and profit margin to focus on two other things. Return on invested capital is going to be one of them. Book value growth will probably be another one. But I'm looking at the return on invested capital, and it's very, very low. A lot of value investors like Charlie Munger and other guys will sit there and say that return on invested capital is about where you'd see the company returns over long periods of time if you're paying fair value for it. So because they're going to reinvest it just shows how much money they make off the reinvestment of their cash. And they're showing that they didn't do very well over the last 5 years reinvesting their cash. So I don't know. It's not the I'm not blown away by this. It seems reasonable. But doing further in depth, I understand like what's the potential for them. Why is their revenue? The reason I don't like them is the return on invested capital is low and the revenue has plateaued. I mean, it seems to just be stagnant. We have to understand why that is.
If you're part of the Bid and Ask Nation, you love Trader Mo, and he's here to talk about the momentum trading with his stock. Go ahead, Mo.
So this is actually our second power stock in a row, which is kind of weird for this market. But let's see, we are over all four of our major moving averages. And we're making 52-week highs. Here's a 12-month chart. So, I mean, this is another one where you are into that overbought range right here, but you have some great engulfing candlesticks in. You're making new highs. If you want to do something, you can if you get an engulfing candlestick tomorrow, maybe today, maybe this afternoon, you can go in there and buy this thing for the first time. Just make sure you're using a stop. And the only reason I say that is because you are in this overbought area. Also, your bid and ask is 5 cents. So you need to get that thing down to 1 or 2 cents at the absolute most 2 cents. That means that there's some kind of manipulation in there between the market maker and the buyer. So that needs to be 1 or 2 cents before you do something.
We are making engulfing candlestick shirts. We will make Bid and Ask Nation shirts. We're gonna have a blast with this merch, wouldn't you say, Paul?
Yes, and F you, Seth, by
I would
the way.
say, yeah. Paul is saying screw Ohio State. I'm saying screw F Paul. And then Don is coming in with Penn State. So we're all arguing within 10 feet of each other here digitally. So, okay. Paul, that was an interesting company. Prestige Brands. That's interesting. They have a lot of stuff.
Yeah, I mean, these are all the things to figure out about why. I mean, yeah, I just look at it saying the concerns I have are the flatline revenue and the low return on invested capital. Everything else seems to be pretty good. I don't know if the debt's too high. I don't think so because I think the profit margin was pretty solid. It's not like I'm wowed and I'm not completely like dissatisfied from it. I have to do more before I change the pillars. I got to do more research on return on invested capital, understand what I don't understand yet because I understand it from a let's say the 1,000-foot view is I've just heard about it. 5-foot view is I understand it completely. I'm probably at 100-foot view right now. I need to understand a little bit more to understand how I'm gonna use it to do I just say no if the return on invested capital is low? I don't know. Do I say yes automatically because it's high? I don't know. That's what I have to understand.
That's our take on Prestige Brands. All right, let's take a short breather. You know I love you out there. Oh my God, Paul, just like that, it's almost 2 o'clock.
Oh my God.
I mean, what happened to
the
1:10 after? Jeez,
What do you mean?
Louise.
I didn't realize it was already an hour.
Oh, come on, guys. When you're having fun, this is our favorite time of the week. This is my favorite time of the
crazy.
week.
Well, I mean, 7 minutes of that was you peeing. So,
I forgot about all that chaos.
yeah.
Paul, I think you should talk about your real estate stream tomorrow just for patrons only.
Great
Patrons
idea.
only. I'm doing a live real estate stream tomorrow on the whiteboard to discuss real estate, how I look at it, how I approach it. And don't worry if you're not a patron. Actually, just join the Patreon. Come on there live tomorrow. It's going to be $17 a month. If you just want to join for the one live stream at $17, it's well worth it because I could easily sold spots to this thing for $49. So pay for 1 month of Patreon. Join the Patreon tomorrow. You'll see the live stream. We're going to talk all about real estate.
Now, there's some confusion in the chat in that, is this a live stream of your pee stream? Is this a live peeing stream?
I was doing, and by the way, I wish somebody knew the song I was doing. It was Despacito, and I don't know why people weren't like noticing that.
Okay, you guys are incredible. So yeah, tomorrow, what time Eastern, Paul?
What is it?
3 o'clock.
3 o'clock Eastern time.
3 o'clock Eastern time.
The
Patrons
link
only.
is on Discord at KC.
Where's the link to be posted for Patreon? Obviously, to join the Patreon, the link is in the description below, and Don will make multiple announcements about that live stream tomorrow with Paul at 3 p.m. Eastern. Okay. Wow. Make sure, of course, folks, that you're tickling, as Mike said last time, fondling that thumbs up. I just love that verb, Mo, and you do too.
I don't know if YouTube does, but
You don't think they're okay with fondle?
who knows anymore?
Okay.
By the way, have you seen our views?
I think it's
Our
great,
views
though.
on YouTube have jumped up like 20%
Recently?
in the last like 3 or 4 days. It's been incredible. This is
Yeah.
going very well, guys. And the great news is our commitment is to the software and our community. We will be getting off Patreon soon and just doing everythingmoney.com where you can sign up there. It'll be a better deal for you because I will be saving some Patreon fees. And for all current patrons, we will be offering you a discount to come off of the Patreon and go. If you don't want to get off Patreon, I'm fine with that as well. But that's not for right now. We're really building the software and this whole Discord community aspect. Don's doing a great job of handling the chats and making more chats. That way, one chat doesn't get overwhelming. Just keep rolling with it. I'm telling you, the number of comments we get every day. Don't ask me. Join the Patreon for 1 month. Just go in there, see if it's worth it. See if the software is worth it. It comes out April 15th.
Oh, Abdon is saying it was clearly Despacito. You're spot on with your harmonics. And yep. And Dom says 25 subs next week would be astonishing. It's going to happen, and we're halfway home to our first Tesla, Paul. Can you imagine the giveaway? We drive to Cleveland, we fly you in, we drive to Cleveland, we pick out a color, we go through, make a whole video out of it, Mo. We'll do lunch, hell,
gonna be
probably
great. I
dinner.
can't wait.
It'll be incredible.
You know, I was talking to the Bid and Ask Nation the other day, and I'm like, it's just so weird that we're going to give one of you guys a car. It might be one of you guys in my chat. We're going to give you a car, and you're just going to be like, yeah, look at me. I'm just driving in the Tesla that you gave me. I
And
think
the
it's so
license plate
strange.
better say,
Oh, I see. What do you want it to say, Paul?
it better say, thanks EM. That's all I have to say. I don't care what state or country you live in. I want that in the license plate. If you don't put that in the license plate, I'm going to kill you.
That was a little rash, but okay. Greg is saying the Discord alone is absolutely worth it. Yeah, you guys are awesome. Okay. Oh, I see. Nick says you're going to get, that whistle was so good, Paul, you're going to get, this video is going to get demonetized because you're, for Justin Bieber infringement. So we won't do that.
Well, it wasn't the Bieber version. I was whistling the fully Hispanic version.
Okay. Mo,
How would you know?
that was a hilarious comment about the cars, but now I forgot what the heck we were going to talk about. Oh no, I'm wrong. I got your next, get your next stock right here, Paul. The next one is from an OG homie, RJ Wolf. You know the name. He wants to look at Extra Space Storage, which is a real estate investment trust company. The ticker symbol is EXR, Extra Space Storage, out of Utah, Paul.
Okay.
If you're watching this later, we know nothing about this company. People have brought this to our attention, and we're going to use our 8-pillar analysis to look at it and see. Would you look at that? We're going to look at it and see, is this something we want to look further into? So no, we have done zero due diligence. I've never heard of this company. Let's get
Holy
after it.
cow,
Paul.
look at the stock price in the last 10 years. $20 to 120.
Wow.
Wow.
That's up, I think, right? And I'm not good with
Even
calculations.
with your math, it's correct.
What is the market cap for
So first
Extra
off, it's a
Space
real estate
Storage?
investment trust. So guys, there's gonna be a huge, it's actually not as big a dividend yield as I thought. It's 3%.
Okay.
If it's really a REIT, then the law states what makes it a REIT is they pay out 90% of their taxable income out as dividends to their shareholders. Okay? Now, it might be because of their huge PE as to why their dividend is so low, which makes sense if the stock price is so high. So $16 billion market cap, X on PE, check on profit margin. Storage facilities have amazing margins. Why? Because it's concrete and metal and it's one person sitting at a desk. You don't have tenants complaining about maintenance issues. You don't have leaks. You don't have all these things. It's a very high margin business, which is also why it's a very, very competitive business because people have realized this, right? Over the years, people have realized how wonderful storage business can be. So it's very competitive to get into it. Last year's free cash flow, $740 million. The last 5 years, $644. So 16 billion divided by 644 million in the last 5 years. What is that, Sethi? 16,000 divided by 644.
2.5?
25.
25, thanks.
Perfect. So 25, so it's an X on the price of free cash flow.
Pillar number 8.
Pillar number 8. We want it to be less than 20, but it's actually 25, so it's an X. But I do like the fact that the last year's free cash flow is above the 5-year average. So based on this, I'm hoping that the free cash flow is going like that. Okay? Very low return on invested capital, 4.9%, but a high return on equity, which is basically net income divided by equity, which used to be a very big thing for Warren Buffett.
Before we move on to pillar number 3, Ken has a great question, Paul. Do you think we will develop a Cliff Notes guide to reading 10Ks? This would be immensely helpful.
Oh, it probably is a good idea. We've talked about doing a video where we talk about 10Ks. I think we've talked about how to read a 10K, but we should probably tag that video or make a video for our Everything Money website so that people who want to learn more, because guys, we're really trying to build the everythingmoney.com website to be the go-to for learning for all of our users, and that's why it's very important for us. But yes, we will definitely do that. But just a quick underlying, risk factors are a big thing. Depending on the industry, you want to look at also, like for example, pharmaceuticals. We were talking about pipeline, and then look at Southwest Airlines. Go read their explanation of their profit and loss statement, and the reason being is, I loved Southwest last year because they made 2.some billion in 2019, and they lost 847. That was after losing 847 million off the 737 MAX issue that they had that I knew was temporary. So I was looking at it going, holy cow, they didn't make 2.2 billion. They made $3 billion last year. So those are the things you can factor in that you'll see in a 10K that you don't just see highlighted anywhere else. And I'd like to do, as part of the everythingmoney.com, is as we grow our user base, have certain people comment under each stock that gives kind of highlights of things that are important in the 10K they might have read. Like maybe we have a 10K notes section where people write down the notes on, like, hey, I saw this in the 10K, man, I'm gonna watch for this. What a brilliant idea.
That's a great plan. I cut you off. Pillar number 3 is revenue growth over the past 5 years for extra space storage.
956 million to 1.34 billion. One of the things I want you guys to note though is how much of this was from acquisitions or building new developments. Because how much of it was, you want to understand in any real estate business and any retail, how much is same store sales versus new growth. Because I didn't like the return on invested capital being so low. What was like 4 or 5%? So it tells me they're not investing their money at a very high rate of return. Net income over the last 5 years.
Yep, this is profit growth.
293 to 438. Check mark there. Excellent.
That's an X for PE and then 3 straight checks. How about shares outstanding is pillar number 5, Paul?
Shares outstanding is an X as well.
Uh-oh.
But it's a REIT.
Okay.
So REITs, as they add more shares, I believe the way they work is they add more shares. It's almost like a ETF in a way that they get the money to go buy more stuff. Isn't that the way it works? Is that the way it works? I don't know if that's the way it works. I probably looked that up.
Cameron said he did the 8-period analysis on this company a couple days ago and got an entry point at 106. The stock is currently about $133. So
oh wow, not bad.
We'll keep going. Current assets over current liabilities is pillar number 6.
Current assets 80 million. Current liabilities 294 million.
Oh my.
Oof.
Oh,
woof. That's an X.
Woof. Why did you just say woof?
I don't know. It's like it wasn't.
I know where it's from.
Where's that from?
I know what it's from.
Hold on a second.
Dig deep, baby. Woof. It's from Home Alone.
Is it? Oh yeah.
Buzz's girlfriend. Woof.
There you go. Good call.
Okay, pillar number 7, my dear friend.
See, I'm kind of
Paul.
surprised why the capital expenditures on a real estate investment trust would be so low. 526, 740, check mark. 526, 594, 671, 687, 740. Exactly what I thought. Just an uptrend on the check mark on the free cash flow. So check there. So we have a lot of checks here. We have 6 checks. Oh no.
Well, no, I have shares going up, and then they're underwater.
I'm sorry,
of assets.
4 checks.
Yeah.
We have 4 checks here.
And pillar number 8 was an X as well?
Yeah, price of free cash flow was 25.
I am not a big fan of going straight to pillar number 8. I know I get back.
I know, it's right there though. Maybe we should switch the order of that.
No, we got to come back to it. Okay, so your final thoughts on this REIT. I know you don't like these in general, but I was trying to help a homie out here.
Yeah, I mean, the dividend's solid.
Their return on invested capital is so low, 4.9%.
It's very low.
Yeah, I mean, I looked at that very surprising to me.
And look at the return on assets, 5.1%. This is the big thing from the book that beats the market. Unless you can get this a screaming deal, guys, I'm avoiding this. 36 PE, that is not a screaming deal. So I don't like that for that reason. Okay, so I'm avoiding this. That's my opinion.
That's an avoid.
That's my opinion of it, yes.
Dr. Momentum, the bid and ask leader.
Yep.
Your thoughts on
So
XR?
first thing that I notice is our bid and ask is 11 cents. So there's something going on here. I don't know what it is. There's not a lot of volume on this stock on a daily basis. I don't think. What's the ticker here? EXR?
Yep, EXR.
I just want to see what the average volume is. Yeah, I mean, average volume is 818,000 shares traded per day. Today's 200,000. So not a lot of volume here. If you wanted to do something, if you love this thing, you would have to wait until you get a candlestick that breaks out and gives you a new high. But to me, this is one of those ones where I say there's 10,000 other stocks out there. Go pick a better one. So pretty boring.
Why?
But it's
Just
true.
because it's how boring it is?
It's just boring. There's not much movement to it. I usually like to only trade stocks that have an average volume of 1 million or more. And the reason is because let's say that somebody can go in there and buy 100,000 shares of the stock. That's going to move the market. You're not going to see that big a movement if you trade stocks that have 1 million or more shares. So that's why I like to do it. I also like that there's more movement on the stock overall, typically, just because there's more activity. So this one, just because it has such low volume, it's at the top of its momentum range. It's a no-go for me. And the bid and ask difference is 11 cents.
That is our take on extra space storage. Interesting. I have a couple of other ones for you, Paul. One is a blockchain company, but I don't know if
Oh boy, Paul doesn't understand blockchain.
Yeah, I mean, you're going to hear the same thing. It's a blockchain company that's maxed out and with the highest price ever and no PE. So I love the request, guys. But
What's with all the bullet holes in the wall behind Mo?
Oh yeah,
we live in a rough neighborhood over here.
Yeah, that used to be where Paul's your board was hung up there many months ago. And,
Yeah.
I have a piece of artwork we're going to
I
try
had
to
to
hang up
dodge
over
the
there.
haters, so I was dodging bullets from them.
So I would say that people want to look at this company, Paul. You ready?
Yes.
This company is called MSC Industrial Direct. The ticker symbol is MSM.
Is this the one that Michael Burry had?
MSC Industrial Direct, through its subsidiaries, is
been
one of the
hearing
largest industrial equipment distributors in the U.S., distributing more than 1.5 million metalworking and other industrial products. They should be selling my DGF, but they're not yet. I'll get on that. But in any case, Paul, do you want to take a look at this company?
Let's do it. $4.7 billion market cap, PE of 20.9, so it's an X technically. Profit margin of 7.4, X as well.
Uh-oh.
Yeah. Free cash flow last year was 372. 5-year average free cash flow is 285, so it's definitely growing. And a dividend yield of 3.5%, which eats up 167 million of their 372 million. Because remember, folks, dividends aren't always secure. If they don't have the free cash flow to play them, you might be in a dividend trap. But guys, you know what I like? Look at this return on invested capital. Average over the last 5 years, 14.5%. This is very good. I look for 15% or so, but this shows that they take their money and they get high returns on investment from it. And I like that a lot. If you're paying fair value for a company, this is the price, this is the return you can expect on the company as it grows. It takes all its cash flow and all of its profit and reinvests it at that rate of return.
Do you want to look at pillar number 3, the revenue growth?
Yep, let's look at it.
Again, we're doing MSC Industrial Direct. Go ahead, Paul.
2.84 to 3.14, check mark. But it is down a little bit since 2019, so you have to understand why that is too. Net income,
Yep, profit.
230 to 224, X.
Uh-oh.
Yeah, but it's very consistent profit in the last 10 years. I mean, this is a very boring company. Look at the profit 10 years ago, 230, profit last year, 224. So it's very consistently boring, which isn't a no to me, which I actually kind of like.
Ron asked, should we be streaming on Twitch? Ron, will you give me some information? I know anything. I thought it was for gamers, so at the moment, today, no, but I'd be interested in learning what Twitch is. I mean, I know what it is, but come on. All right, shares outstanding, Paul, is pillar number 5. I love you, Ron.
56.3 million shares to 55.66, so that's a check right there.
Oh, it's going down. Okay, check. We're doing good so far. Shares outstanding.
Oh, we already did the
No,
shares
my
outstanding.
apologies. Current assets over current liabilities is pillar number 6.
Yes, current assets 1.15 billion, current liabilities 500 million, check mark there. And they pretty much have enough money on hand to pay off all their liabilities. They have 1.15 billion in cash. They have 1.16 in total liabilities. So it's hard for companies that have enough cash on hand to pay off their debts to go broke. So I like that a lot. Major check mark there.
Okay, free cash flow growth is pillar number 7, the granddaddy of them all.
So the average is about 285 million. They went from 270 to 372, check mark there. 270, 210, 288, 283, 372. So check mark, and 285 million is the average. Uncle Seth.
I just caught on. You hired the developers to give you your average, so I don't have to do it anymore.
Correct.
I love you. You know I love
I
you.
just need to get it put over here. So Seth, what was the market cap of the company?
4.7 billion is the market cap.
So 4.7 billion divided by 285 million.
285, 16.5, Paul.
That's a check mark there then. Now, I will say this. I don't like this number. The company is not growing. There's no growth potential. Even though it's a check mark, it's less than 20, it's not low enough. I want to pay a lower amount for this company. How much lower? I like the return on invested capital of 14.5%. So I'm going to sit there and say maybe 12 times free cash flow. So that is 2.85 plus 570 is 3.4 billion. And what's the current value?
4.7 billion.
So it needs to go down by 25%. What's the current price?
$88.
So I need to be at 66 bucks.
This is your target price for...
So 66 to 70, I think you'll do pretty well. I think you'll be able to easily get, and I like the balance sheet. I like it. I mean, listen, it's not much of a drop. 20% drop you need. You need a 20% drop to be in the price range. That's the way I would look at it. Is it big enough to do puts on?
Go ahead,
Probably
Mo.
not.
Probably not. I would guess no, but I don't know. Why don't you pull up an options chain and check?
I will.
Mo, you want to go over some trading on this company?
Yeah, sure. Oh, Paul, their average. Oh, am I looking at the right thing?
What?
MSM, right? Yeah, I don't know. This is going to be hard to do puts on, but I
Why?
think
What's the volume?
400,000 a day average.
Oh, that's low.
Yeah. So again, we're in that overbought range up top. So I'm not loving that. And we can see, so on my charts, when I do get my red line, which is my percent K, rolling under, and going under my yellow line, which is my percent D, I turn red on my candlestick chart. So we are flirting with that right here back, say, a week ago. That makes me a little bit nervous that we're in this overbought range. And today's price is at the bottom of the candlestick. So if I'm doing something with this, I also just noticed the bid and ask difference is 12 cents. So, man, this is another one where I'm thinking you don't do anything with it, but if you absolutely want to, you can go ahead and buy if you can break out above this previous high from last Friday. But again, this is one of those companies with an average volume of 400,000. This is even less than the last one that we just looked at. In my opinion, you guys should be looking at companies to trade with average volumes of 1 million shares or more per day.
Dark Knight is asking, why does MSM have a high PE and a low price to free cash flow, Paul?
Well, the PE was 20, right? 20.7?
I have an extra
20.9.
Yeah, 20.
Okay, the price of free cash flow is based on 5 years. The PE is based on 1 year. The last 1 year, is 373 million, and that's about, oh, it's still low actually. You're right. That's a good question. Over long periods of time, the free cash flow net income should be pretty similar. So it's a good question. I mean, there's a lot of different IRS rules. I don't know what their financials are like. Maybe they have a lot of depreciation in there because they do something with metal and machines. I don't know. I have no idea. But that's one of the things. That's a good question to ask about why their free cash flow and their net income is so different.
All right, let's take a little breath here. Take a break. All of you there. I like that, Mo. I can hear you take that deep breath. I like that.
I needed it.
Make sure for a moment of likeness, if you can just tickle ever so gently that thumbs up, that'd really help out our channel. Obviously, we spend a lot of time with you guys. Paul, I didn't realize, that like our commitment to this show takes up a vast part of our life. Just giving off all this free information,
Well, yeah, but it's not
funny.
free information. I mean, we make money off of it, but at the same point, it's like we thoroughly enjoy this, and I just really believe that most people out there can understand investing, and it's not as If you meet somebody who tries to make investing complicated, it's because they want to sound smarter than they actually are and avoid them like the plague.
Totally
Investing in a company is no different than looking at yourself as an individual and how you handle your cash flow. No different whatsoever. How you handle your cash in and out, how you have your debt personally, and how you have your growth and income is no different than a company. You have to if you compare every company to a person, you'll understand that better. The only difference is maybe like an old company that's boring is like an old person that's boring, but with a lot more potential. I have no idea. Because if people are usually going to discount it, you can probably, maybe that's the same thing as the real world. You probably hire somebody who's 75 for a lot cheaper than somebody who's 30, because somebody who's 30 says, I'll look at the things I can do and all that stuff, while somebody who's 75 might be like, oh, I'm just here to do what I need to do. So it's going to be, the whole point is, investing can be broken down into very simple ideas, and I want you guys to understand that and help you guys understand that. And you guys ask great questions that kind of get me to the point of saying, okay, these people get this. Like, people do understand what we're talking about when we talk about fundamentals. What do you think, Mo?
Yeah, I mean, I'm actually, when people start talking about fundamentals in the chat, I'm like, oh my gosh, there's actually people that they get this, and it's pretty awesome. And yeah, I think we do simplify things the way that we don't try to sound smart. That I do think that people example, when Seth and I walked back from lunch today, and he's like, there's these other guys, other traders that just make things complicated and this and that. I'm like, yeah, I think people are really surprised by how few metrics I use and how well that works. I don't know what are they called? Fibonacci or Fibonacci lines?
Yeah, Fibonacci.
I don't even know what those are.
You don't know what a Fibonacci number is?
No, somebody was
Seth,
asking.
do you know what a Fibonacci number is?
I thought it was an Italian opera singer.
Yeah, that's what I thought. So, and then somebody was asking me about some other thing yesterday. I'm like, I don't care. I mean, sure, it's cool to know, but
Fibonacci is 0, 1,
why do I need it?
1, 2, 3, 5, 8, 13, 21.
What is he doing?
34. So it starts with 0 and 1. You add these two numbers together. That's 1. Add these two numbers together. 2. Add these two numbers together. 3. Add these two numbers together. 5. Add these two numbers together. 8. And it keeps going and going to 55, 89, and then you keep adding up. That's Fibonacci numbers. But if you look at if you look at like science, it's weird where Fibonacci like patterns occur. Like something having to do with like acorns and how their things are, and bees and how they populate, something like that. It's just weird how Fibonacci numbers appear in all these, and it also appears in trading in terms of Fibonacci levels. I don't know them, but it is there.
Hey Seth, remember how he was saying that he doesn't understand numbers in Spanish?
Yes.
Like that's like us in English though.
Yeah, I thought Fibonacci was some sort of noodle or
That's
something.
what we
some
think.
sort of
That's how we
pasta
feel.
dish.
It is a great
Listen to
pasta
Paul
dish,
talking
too.
English.
We have so many requests out there.
Wait, what is happening?
So many different requests. Wait, what is happening? You're right.
Flower petals and seashells. Got it.
Goldie's asking
Sharp
for this,
ratio.
this-
That's what somebody was asking about.
I don't
too.
use a Sharp ratio.
Yeah, no.
Paul Goldie is asking for Trimble again. Should we humor him and get after this?
Trimble. So we have 10 minutes left. Should we just do a...
Q&A.
If I push him off again, he's going to come swing in on Thursday asking for Trimble. You wanna
Let's
do
just look at the 8 pillars right here.
Okay, go for it. Uh-oh, Goldie. He's
So,
going straight to the point
What is this?
here.
Trimble?
47.65 in the PE ratio, 12.4% profit margin. There is revenue growth, up by $785 million over the last 5 years. There is net income growth, about $250 million. Shares outstanding are barely down, but they are down. Assets, liabilities, negative by $90 million. Cash flow growth is up $206 million over 5 years. Price of free, this thing is expensive as all get out. I like the fact that the PE and the price of free cash flow are reasonably within each other. Even though the PE is a 1-year basis, the price of free cash flow is long-term. So they are pretty close. Return on invested capital, again, a low one at 5%. Look how ROIC and return on assets are so similar. A lot of people use these interchangeably, but they are very similar all the time. So there is a low return on invested capital, really high gross profit margin, no dividend, a growing free cash flow. I just think this is expensive. I don't think it's something to avoid. I just think it's expensive. This might be a company where the assets over liabilities may be maybe a thing that's evolved in the business. Maybe they hold a lot of paper. I don't know. Whatever the reason could be. But it's just expensive, it seems. So let's go figure that out.
People are asking about Nokia. Don, haven't we done Nokia recently?
We have.
I I don't think recently. I know most.
I have a funny story about Nokia.
Go ahead, Mo.
So back in 2017, my father decided to buy Nokia on one of my accounts, and I forgot the password to this account. About whenever the GameStop thing happened the first time, Don came in my office and he was like, have you seen Nokia going? So I was like, man, Nokia, I thought I held this thing. So I went in there, had to find what account this was in. Turns out I made 100% on my money, I sold it that morning, and then it hasn't been back there since, has it, Don? So that was lucky. That's what I know about Nokia.
What do you think?
That's why you come here for the great analysis.
Yeah, we just dismiss it. Paul, what do you think? Are you tired?
Yeah, I'm a little tired. My throat's hurting. Here's everythingmoney.com. It was $8 2 months ago. Now it's $17. It's only going to $49 at some point in the future. I don't know when. We have 1,500 people who are subscribed to it right now, and it hasn't even come out yet. Our competition, $199 a month, $199 a month, $35 a month. These are all contract-based except for this one. This one is month to month. You get everything. The biggest thing here is the Discord community and the Everything Money 8 Pillars website with financial data.
Now,
If you believe in learning, this is the way to go.
No, I would say, Paul, you are a whiz when it comes to stocks. But when I first met you, for at least the first 2 or 3 years, I mean, you were the real estate man, and still are. I mean, I think people, if you tune in tomorrow, you are going to see Paul's chops when it comes to real estate, because you know exactly what the hell you're talking about.
Well, thank you. The funny thing is, everybody sees me as a stock guy here.
Yeah.
But before this, everybody saw me as a real estate guy, like in the real world. Probably
Absolutely.
like, oh, do you understand stocks too? I'm like, oh, I do, kind of. I mean, I always tell people, I feel like I'm better at stocks than real estate, because real estate isn't difficult. There isn't as much motion in real estate. With stocks, it's all about managing your emotions, because every single day it's telling you this is what your company's worth, this is what the stock is worth according to the market. So stocks is always harder, but I like stocks a lot more.
Charlie, are you a Patreon? I'm just wondering. Charlie Garrido, is that name familiar? Charlie?
Not gonna work here anymore.
Yeah, you are real estate at heart. Charlie, let me know. So yeah, Paul, what else? What else are you thinking? I know you're getting tired. Your girlfriend was here. You probably had. I mean, this was the first time you had a woman in your life for like the last 4 or 5 days.
Okay, let's stop talking about it.
That was incredible. I mean, right, Mo? Did you see how how nice he was and how they get along? It's real nice to see. She's
great.
just a delight.
She's wonderful.
Yeah, she's just a delight. Other people are asking for so many. Guys, if you ask for some of these requests, we'll certainly do them. The reason I asked Charlie is he's asking about this one company, and it looks pretty sexy, Paul.
We had which company? Well, let's do a shout out. Adrian, Kabir, Steven, Ronnie, Dwayne, Nathan, somebody named Stocks, Jeff, Tiff, Karina, Carol, Ever. These are all the new
ex-girlfriends of yours.
No, these are all the new patrons in the last hour and a half. Guys, this is awesome. I mean, we've gotten 10 or 12 here. It's very popular. It'll go up in price. Trust me when I say this, you're going to regret not signing up. It was $8 just 2 months ago. Now it's $17, on its way to $49 at some point in the future. When? I don't know.
Nicholas is asking about this company, Lufthansa.
Oh, Lufthansa Airlines.
Great airline.
You like it?
Oh yeah, I love them.
We don't have the.
No, we'll do a
money
video
data
on it.
but
I think
foreign.
it's German or something.
Yeah, it's
okay.
foreign.
Great airline.
Great. Okay.
Thank you, Saxo Kid. He just signed up.
Love you guys. The company I was talking about, Paul, maybe we can do a video on this. It's actually called, listen to this. It's called, have you ever heard of this, Mo? Bachoco?
No.
Bachoco. It's a poultry process.
What's the ticker symbol?
The ticker symbol is IBA. Bachoco, it's a
Industrias?
It's a poultry processing company. Headquarters in Mexico, Paul.
Oh, why do we have the data on it then?
Founded in 1952.
Interesting.
I was
PE
looking
is
at the
less
PE.
than 1.
Yeah, I'm looking at this. It's
PE is
interesting.
0.5?
Yeah.
Should we look
What?
at this? Should we look at it?
Let's just do this. Let's do the 8-pillar screen.
Okay.
Ooh.
Whoa, look at this, Paul.
PE of 0.55. Profit margin, X. Net income growth is down. Revenue growth is up a lot. So that's weird, guys. Why is it net income down and the revenue growth is up? Shares outstanding is the same. Assets over liabilities by a big number. Cash flow growth, huge. Price of free cash flow, 1.5. What the heck?
Los pollos hermanos.
Dividend yield of 38%. Okay, what's the catch
Yeah.
here? What
What's
am I
the deal
missing?
here?
What are we missing here?
This is why someone brought it up. They sell eggs, Hosyan's saying.
Oh, Hossein.
Oh, this is from Hossein?
No, but Hossein's joining.
Oh, yes,
okay.
Hossein.
This stock is nuts, Jonathan's saying. Interesting. Do you want to start over?
No.
That's the content we bring you. No.
They have plenty of cash on hand to pay off all their debts, too. They have $18 billion left over. The market cap is... Okay, something's weird here.
Uh-huh.
IBA.
Maybe they're peddling meth.
Huevos
This is definitely Los Hermanos.
Huevos rancheros.
Yeah. You want me to do the technical side of it?
Yeah,
real
do
quick?
it.
Go ahead, Mo.
This is another one of those 50%. Oh, bid and ask difference is 66 cents. Yeah, I don't know what's going on with this company, but
Giggity.
there's that middle area, and this is that resistance with all that overhang that is just pushing down on you, because people will start getting up to this level right here, and then they'll sell off and take their profits. They'll creep up there again, sell off, take their profits. So,
David's saying there's no trade volume with this company.
oh, well, that explains the bid and ask difference of 66 cents. So, because of that, I wouldn't do anything with it. But if you were so inclined, and because we're teaching, and I'm trying to teach you guys how to do this, what I would do if I saw this and the volume wasn't a concern is I would throw a tracker share on here, because I have the red line crossing through yellow and it's heading up towards this sweet spot. So once it breaks into the sweet spot, then I can go ahead and add shares.
an error.
Subsequently, you'll have green candlesticks coming up like this, and that's what you would do with this thing. So this would be a good stock of why you would put a tracker share on something, which is one share to keep it on your mind, see it every day in your portfolio, instead of putting it on a watch list and missing things. I would always forget to invest in good company or good trades without putting tracker share. So that's what I came up with, tracker share. Buy something for $40. Worst case scenario, the company goes under and you lose $40.
Go ahead, Paul.
There's something wrong with it. I always tell, when I heard it was a Mexican company, I'm like, I don't pay for data from other countries. There is something wrong in my data here because it's not showing the right data. It's still a very low PE and a very low everything.
Yeah, PE is 11, not 0.5.
Yeah, I'm looking at going still dividend yield, PE, price to book. Well, the good news is I actually like it more that the numbers are more reasonable.
Do you want to run it? This is intriguing.
Well, we don't have time. It's going to end in 2 seconds. They have more cash on hand. Yeah, this is pretty interesting,
Paul, let's get after it now. Come on, let's go overtime here. You're ready. This is the final one of the day. We got to push through. It's the fourth quarter, damn it. They need us.
Okay,
They're all
ready?
here. The company is IBA.
Okay, we're going back to Y charts here. PE of 11, check mark there.
That's what I'm
Profit
talking
margin 4%, which is an X. Dividend yield 1.75% on $2 billion is $35 million. So we want the free cash flow to be above $35 million.
35 mil for dividend. Okay.
Revenue growth over the last 5 years, the
Yep.
check 2.8 to 3.22, check mark there. Net income growth 211 to 172, that's an X.
Uh-oh.
Shares outstanding is a check mark. It's basically the same. It's 50 down to 49.98, so I'm not going to even, that's a check mark there.
Shares is a check, okay? Current assets over current liabilities.
1.6 billion versus 400 million, and there's a total debts of 700 million, so they have 900 million left over. So the company was a $2 billion company, but you get 900 million when you buy it and pay off the debt, so it's really a $1.1 billion company. So now all the numbers, now the PE went from 11 to 6.
Even better.
Yeah, so this is
interesting.
yes, this is very interesting. I wonder why this is.
Was that shares outstanding? That was current assets is a check. How about free cash flow, baby?
You have to pull out your calculator here, Sethy.
This is a tough one. Go ahead.
12 million to 140 million.
It seems
check
like
mark.
it's going up.
Yes.
What about the middle numbers?
177, 80, 56.
Okay, the average free cash flow over the past 5 years is 93, Paul. 93 million.
On 2 billion is over 20. So it's an X technically, but remember, you're paying 1.1 billion because of the cash on hand, so it's around 12 times free cash flow over the last 5 years.
12 times free cash flow?
Yeah, when you take the net cash on hand.
That's a check for pillar number 8 then?
Technically it's no. Technically it's not. But if you factor in the the net cash, it's technically an X. It is technically an X because we look at the market cap being 2 billion. Because we don't. Yeah.
What's an ADR, Paul? Longshot's saying it's an ADR.
What's an ADR?
I don't know. It has no volume. Do not buy this, he's saying.
Oh, did he just say the average is 9,000 shares traded per day?
Average is 9K.
No,
yeah,
he's saying
that's
not
right.
900, not 90.
Not
Symbol? IBA.
Interesting.
Oh, he's right.
What's he saying?
Average shares traded per day is 8,861.
By the way, that doesn't scare me. It could be, it just could be a good value play in
Berkshire
Mexico.
Hathaway is like, a different situation of price, but it's like 70 shares a day or something.
But again, when you buy foreign guys, you got to make sure, even when you buy local, you got to make sure you understand what the laws are in the country. Like, why is it? That's why I prefer to stay in the U.S. because we don't have a research team to go out there and say, maybe Hossein can be the guy who does the research for us. But I mean,
ADR means it's a foreign stock listed in the United States. Thanks, Subin.
Nice.
thank you.
All right, guys, that was it. We saw, if you want to see Paul's gorgeous Mexican girlfriend, rewind the channel rewind the show right to the beginning. I'm so tired I can hardly talk.
Guys,
go ahead, Paul.
Sign up for the Patreon, because when on April 15th the price is going up, and it's not going to be a $1 increment this time. Make sure you get on this now, because April 15th is a big release date. Everybody will have the software. And if you want, join my tier. It's the Bid and Ask Nation. It's $55 right now. I don't know how many spots are left, but once those are gone, that price is going up. And they're not going to be $1 increases. So everything that I do on the charts here, if you like that, come on in and do it. I mean, we have people in that chat that have paid for their entire year worth of Patreon subscription in 1 month. And not only do you get me, you get all the software for free. So it's a great value. Come on in if you like doing trading and whatnot.
And if you join the Bid and Ask Nation, you get automatic entry into that Tesla giveaway. I have my Tesla in the parking lot. That car is incredible. And when you step on the gas, which is funny, there's no gas. When you step on that gas pedal and floor it, you'll get thrown in your seat like a rocket launcher.
Oh, yeah.
And it's incredible.
It's fun.
Paul, thank you again for your commitment to the channel, just your general sexiness and just sex appeal, really. And Trader Mo, your handsome self with the sexual overtones that come on with trading is just absurd. You know that, like every sentence out of your mouth has
I never noticed it until I started teaching it, and it's just like, oh yeah, this is like a very sexual thing to do.
And Paul and I are just giggling in the background. So I love you guys. You've brought a lot of happiness to our life, even the haters.
Don't forget our live stream tomorrow for real estate, Patreon only.
3 o'clock.
And if you patrons up there, don't forget to sign up for the March Madness bracket. $2,000 for first place, $1,000 for second place, $500 for third place, $250 for fourth place. No entry fee. It's all free. Just go click the link in the Patreon announcement page. We have 195 people signed up. I want to get 300 or 400 of our 1,500 going. If you're foreign, doesn't matter. Sign up. Just do it. It's a giveaway. I don't think there's any laws affecting me. If there are laws, I will send you the cash. Western Union, I don't care.
Beanie,
come at me, government.
Beanie, I see all your comments there about the videos. Will you reach out to me, please, on Discord and talk to me? We'll talk about these videos. I love the insight. Guys, thank you so much. GG. Good game to everybody.
GG.
The sun is coming out. My 72 Cadillac.
Can I make a comment?
Go ahead, Paul.
Nick Larmore says, I'm up 70% all time since October from joining this channel. All credit to Paul, Mo, Seth, and Don. As much as I like to take credit for that one, do not give me credit for that. Give me credit when 5 years from now, the market is down 30% and you're up 60% because you bought value plays and you bought the things that matter. That's what I want credit for. I want credit 5, 10 years from now, not today. I want credit 30 years from now when you're worth 20 million because you invested the right way. That's the credit I want. Short term, there's no credit to be given to me. Just like if you were down 20%, I wouldn't take the blame because anything can happen in the short run. I'm here to teach long term. Everybody else on YouTube will take all the credit in the world. I will not. Give me a call 20 years from now when you're a multimillionaire sneezing with $100 bills because you invested the right way. That's when I want credit.
I'll take all the credit on your trades. I'll take them all.
Trades are different because it's short term. Momentum trading will be different because it's short term. But long term with fundamentals, it's about long term. 5, 10, 15, 20 years. Yep. That's when I want credit.
Yep.
That's our show. Thanks for watching. Tickle the thumbs up. Fondle the thumbs up on your way out. And yes, I do have my 72 Cadillac Eldorado with the top down convertible rolling down the street. We'll show videos of that too. I love you guys, and pull the curtain. Good idea. I love you guys, and see you. See you Thursday. Thursday at 1 in Paul's Real Estate tomorrow. Love you guys. Appreciate it.